Welcome back to NinjaTrader Live. I'll be your host, Tom Schneider, CMT with NinjaTrader. And on this segment, Traders Workshop, we like to bring in our NinjaTrader ecosystem partners who can then impart their expertise and wisdom with you, the viewer. Today's no different. We have a long-time guest and friend of the show, the founder of Spot Gamma, Brent Kochuba. How you doing, Brent?
I'm doing really well. How are you doing?
Doing great, actually. It's beautiful here. I'm assuming where you are is kind of close to where I am, and we've got a beautiful day going.
It's unbelievably warm. I've actually gotten more concerned about climate change in the last couple of weeks because this feels too good, and it seems like maybe I'm getting a little nervous.
Well, we'll take it while we know what's around the corner. So, enjoy these days as they are. I grilled last night. I wouldn't have thought I'd be grilling in November, but here we are.
Yeah, that's true. I prefer to grill in the winter, actually, less bugs. So, I don't
Oh,
know.
very good, very good. So, you mentioned before the show, interesting days trading, right? Because of the volatility. What kind of walk us through? We've got a couple things going on. One is we had a couple of big news events last week, and then it's options expiration this week. What are you thinking going into this weekend?
Yeah, the this is the most fun time to trade, right? When things are finally really moving, and the options market is giving us a lot of really good signals. And I think the way that I would characterize this as we had the Trump sweep, which it's been beat to death. That's been bullish for markets, and then FOMC was a total. I would just call it a dud, right? Like nothing happened, which is what the market likes. And so we got a rate cut, and the result is a big move in the markets, and that is like if I just had to kind of characterize it, 25% fundamentals, let's say, and then like the other 100%, so that extra 75% is just FOMO and chasing. And
Right.
so, we very quickly went from like a bullish expectation to overdone. And, we're kind of now digesting some of that overbought condition, I would say. From, you as a CMT would characterize it as overbought. I would say the vol is too dang high as an options guy. And so now we're digesting that here on options week. And, it's kind of an interesting thing because, people immediately extrapolate what Trump means for the market, right? And some of those things are truths, like, he's very pro stock market. But then, I think people are starting to say, well, that means like crypto is going to get a complete path to, like unlimited government support. And this means that all these other things for the markets. And I just thought it was funny because then all of a sudden people started getting worried on Wednesday. I think it was actually tomorrow that there's going to be the Senate vote, right? And McConnell's going to try to screw up the Trump administration. So it's like, this just shows you that nothing is set in stone yet. Like we can sort of guess at what policies are going to be, but people just like went full FOMO into like, the best of what Trump could possibly bring. And so again, I just think that overlaps with this idea of like too much too soon, time to take a breath and then retrench. And this OPEX, I think, offers like a great time for that consolidation phase.
I was wondering because of that move up last Wednesday and then, followed by successive but shorter moves up, thinking about the stock market specifically, what was the results of the election on Tuesday? Did that reset a lot of those options levels and those call walls, if you will, or put walls, whatever's there, dramatically that
Mm-hmm.
just kind of added to that move up?
Yeah, if you there's two features of the market going into the election that were interesting. Number one is implied vol is obviously very elevated, so the VIX was around 20, and then the second one was we were at or near all-time highs broadly in the markets, right, in equity markets going into the election, and there really wasn't much in the way of call positions at strikes above. And
Mhm.
so I think that the market was unprepared for sort of like the quick leg higher, even though it seemed to be a meme that everyone was sort of assigned to, right? Or an idea that, hey, if Trump wins, the market's going up. But I think people were kind of initially unpositioned for that. And I say that because when you looked at names like Tesla or even the S&P, there wasn't much, there's not much strikes above, which tells me that people have to sort of reposition for the idea of higher markets.
Right.
And then the second thing was, vol got crushed so hard just immediately after the Trump victory. The VIX went from 20 to 14 and change, right? And it's
Mhm.
bounced a little bit there. So people now expect no risk in the future, right? It's been completely just decimated. We were laughing talking about the CPI, for example, tomorrow. The CPI used to carry an implied vol reading kind of like 25 to 26, 27%, somewhere in there for tomorrow's expiration. Right now, it's pricing in 14% implied vol, which is, if you're going to look at like a baseline of implied vol, is 14 is kind of about as low as we really get for like a zero DT option. So the point here is that risk has just completely been decimated, right? And the question now is like, are we going to go up? And like how high are we going to go up, right? That's what really people are kind of jawboning about at the moment, which is a real state change, I think, from a few weeks ago where it felt like we were more climbing a wall of worry, right? Now we just seem to be positioned for uber bullishness.
Well, and I think a lot of it was we didn't know who the outcome of the election was not a done deal. It was not anything that you could say with certainty. You hear the media versus the betting pools, right? And they're saying different things, and there's a lot of indecision. So, you can forgive the market for not being prepared for the upside if, you're hearing there's almost the equal amount of noise or even more. So saying, you know what, it's not going to be bullish for the market or as bullish as you think. So that's kind of where I see, that might explain the unprepared for the upside part of it.
Yeah, and if you look at skew, which is a measure of kind of put values versus call values, people have sold the put wing now. If you look at Apple or S&P or major stocks, they really sold the put wing, shorted the put wing. It's been beaten down, and they're starting to bid up that call side a little bit now. And so, we call that skew shifting or rotating. And that shows that people are positioning for, quite a bit of upside. But we got, really too far too fast on a lot of things. When you look at small caps, for example, we rank skew. And so we see a 90% skew in IWM's skew ranking, which is simply telling us that calls now are more valued than puts, higher than 90% of the time that we've looked at that data over the last year. You look at things like Tesla and Bitcoin. I mean, they are. You could probably tell me what the RSI or Bollinger Bands or whatever on that, but I'm guessing they're super stretched, right? And this is the environment that we're in, right? It's a real FOMO kind of environment. And I was sort of laughing, like if you remember in 2020 and 2021, like Tesla was the original gamma squeeze, right? That was the name that first really showed the power of the options market, and Elon would attack the short sellers and things like that. And then the other people of that area, if you remember, were Kathy Wood of ARK, right? The ARK ETFs, like those ETFs were just going bananas. And then the third one is Roaring Kitty. So I was joking this morning that Elon was like retweeting Kathy Wood, and ARK ETF, ARKK, is the largest holder, I believe, of or is a very large holder of Tesla stock, I should say. I think about 20% of that ETF is Tesla, right? So you could see these memes starting to percolate again. And I was saying that all we need now is a Roaring Kitty appearance, and then we've sort of hit the trifecta, or the the meme trifecta.
That's was that Bad Money? Was that the movie that just came out about GameStop?
I didn't watch that. I goes like GameStop that, but people said that one was pretty entertaining.
It was definitely entertaining. It had a humorous touch to it.
Yeah.
But I know you were involved in the documentary about that.
There was an NBC one. Yeah, Diamond Hands is the one that I was in, and that was an interesting one because a lot of people made, these retail traders made millions and millions of dollars, some of them, and then they immediately took that money and then rolled it into crypto and a bunch of other things, which, right now looking at Bitcoin at 80,000 or 90,000, you think, yes, that's awesome, but that was 4 years ago, and I don't think a lot of them necessarily maybe they did hold through that period.
Right.
And so I don't know if people have learned their lessons now in terms of like, hey, let's take some gains and be a little more sensible with our, lottery winnings, but we'll see. There's a human nature in that, right? That you want to just sort of double down.
Of course.
Return.
So let's take a look. I'm looking at a really cool graphic here, and I want everybody to see it. I'm always about data visualization and, what the data can tell me with not just numbers, right? That's why I find this very attractive is you've got this chart that has different color background, I know is changing based on the data, but can you explain kind of what this is showing us first of all?
Yeah, we talked about OPEX week. You briefly mentioned it. And so this is a period for the S&P generally consolidates, and then you see some pretty big single stock positions build up because it's the third Friday of the month. And so what you're looking at here on our trace map is we talk about gamma notional oftentimes. And positive gamma markets are markets that tend to be very sticky, so the trading ranges are very narrow. And so you could see positive gamma here on our heat map, which is this purple kind of blue shade of blue. And this translates to what we call high stability. So stability just means a stable, low volatility market. The reason we called it stability, not volatility, is simply because when I say it's a high volatility market, people think markets crash, but that's not the way it works, right? Volatility works both ways. So we're a very stable market because what's happening is we're going to move to options expiration. And the closer we get to expiration, we have gamma starts to increase as a flow. And so what you're looking at in this map is this bright purple map. Here you see around 6,000 where the market's turning. There are some fairly large positions above. That's what these blue bars are. And then there's some fairly large positions, positive gamma positions below. And so what you're looking at is basically this sandwich where market makers in our estimation, and this is a real-time estimation, they have to buy the dip and they have to sell the rally, and that all centers around the 6,000 strike. And so, that means that this is going to be, in our projection, a pretty quiet week. And then this week gives way into some big events next week, with VIX expiration and NVIDIA earnings. NVIDIA, obviously, going into August was the #1 stock in the world. I think it's flickering in terms of its market cap, but I look at it as its importance from the options trading perspective, where, such a big options complex tied to NVIDIA. Tesla's stealing some of that thunder, but I think that if the NVIDIA earnings are good, right, and we reignite that semi-chip sector, then the market, you really got to start to price in, a significantly higher market in the end of year. Because if you trigger that AI sentiment, that chip sentiment, a bullish sentiment, along with the Trump trade, that could really ignite, quite a mania. And I, what we're doing here with dealer positioning, if I turn this on, is we track whether we think dealers are short and long various puts and calls, and we update that throughout the day. And so you could see here that there's some fairly large positions, like down here, that are 96 percentile positions. So they're pretty meaningful. But if you just look at a raw absolute measure of gamma, I wanted to show you this because it so kind of stands out at you. This is the total raw size. So if you just take open interest and you look at a gamma notional value of the 6,000 strike in the S&P 500, right? About 30% of this is set to expire on Friday. So this strike is just a beast of a strike. There is a ton of positions at this level. And when that, as we get closer to expiration, that probably increases, the size of this position increases on a gamma basis. And so that just means that there's more flows just churning around this level. And so I think it's important if you're an options trader or if you're a futures trader, because, you want to play, I think, mean reversion into the strike, because there's a lot of flows dedicated to kind of pulling us back into this critical level. And this position, the S&P, sorry, go ahead.
Real quick, just to be sure, this is all the puts and calls with a 6,000 strike amongst all expirations?
Exactly. That's exactly right. Yep.
And just for the index, or is it for ETFs and futures?
Great question. This is just for SPX index. And, this is far and away the biggest level across the S&P complex. We can look at spiders, and, in spiders, the complex can be just as large. And what you see here is the 600 level is very large. So 600 in spiders is a little closer to 6,015 in the SPX. But you can see from a notional value, it's a little bit smaller, fractionally on the put side. But, you could really see this range, right? You think about these two like field goal posts, right? And we're just sort of like, going to churn around that various level. And you don't get that same view. When we look at the small caps, we look at the IWMs, right? And you can see that there's not a real standout strike. And so what you get in the spiders and the SPX, you're getting $400, $500, $600 million of gamma around those various strikes. In the IWMs, you're getting, $150, $200 million worth of gamma notional at these various strikes. And the other thing that's interesting about this too is that, I talked before about the skew rank being very high for IWM, which tells us that calls are very expensive relative to puts. You don't have that same skew rank in the S&P 500. So, it's like, if you think about the IWMs, it's just very stretched, right? Like the RSI would be very high, or the Bollinger Band would be very high. And that makes sense because IWM's up, 8-9% since the Trump election versus the spiders, which are up, I think, 3.5% or something like that. So, there's definitely some differences in the way these different indices are trading.
It's interesting because you think that, an event like last week would move the markets, right? Oh yeah. Dollar's stronger, stock markets up, Gold is down a little bit or quite a bit. It depends on your point of view.
Mm-hmm.
But I tend not to think of, well, until recently, I haven't tended to think of the distinguishing between S&P, NASDAQ, Russell, Dow, but IWM being small stocks, small cap companies, it's a much bigger impact, right? That this election was much bigger impact to the smaller businesses than the bigger businesses.
Mm-hmm. Yeah, yeah. That's that idea of, I think, the Trump trade and people, looking into the future and saying this is for sure what this means, that small caps should get bid, and we don't know the policies and we don't know exactly when and where and how, and like Tesla, for example, Elon is meeting with Trump every day right now, right? Which I don't know what Elon does. Does he step down as CEO of Tesla now? And I literally have no idea. It's just that what happens if, who knows what happens, right? And so I do think it's bullish for Tesla, but does that mean it should be going up 30-40% in the course of 2 days? And then the other issue with that is that the options prices start to extrapolate that in the future, right? So if you look at, Tesla, for example, and you see these call values and you say, great, the stock has gone up. So this is skew here, right? And so this range is our 90-day range for skew for 1 month options. And so you could see how high, the right side of this is call options. You could see how high these call options are now, right, relative to the last 90 days. And so what happens is you say, great, Tesla's up 30-40%, and people chase, and then the value of call options goes up and up and up and up and up, such that now, you can see that these out-of-the-money calls for a month out are pricing, they have 80% implied vol. Well, you're pricing in 5-6% daily moves now for Tesla. How many 5 or 6% daily moves can you possibly get in this stock after it's gone up 40%? So it just becomes like a probability that even though you buy a call, that Tesla could still go up, but it's not going up the same rate, right? So then you lose money on that call. Does that make sense?
Oh yeah.
Like you're just buying things at too high of a relative basis, and that's what this is screaming at me here, right? Like Tesla should continue to go up. I wouldn't want to bet on it crashing here. But the rate of change has gotten just way out of hand. And so, again, this is a time, I think, for some real consolidation. And, we're getting a little bit of that, I think, here today, and that may strengthen into the end of the week.
It reminds me, Brent, juxtapose that against just a few months ago, we were looking at your chart of how many days since a 2% move in the index, right?
Yes.
And that chart would be much different now, looking right than when we first saw that, when you introduced it to us a couple months ago or a few months ago.
Yeah, you're 100% right. And, from that perspective, the Trump trade is this kind of negative gamma position, right? Like you want to be arguably long options with the Trump trade as opposed to, shorting them or selling them. Now, as the S&P rallies, there's a lot of systematic call selling flows. Like, there's this big trade now called the QILD. It's a NASDAQ overriding ETF that rolls right now, right? So there are these big funds that sell systematically calls in the S&P 500, and that should throttle some of the movement in the S&P 500 and the NASDAQ, right? In other words, like we still go up, but it's a very measured pace. It's that thing that you're talking about before. Like we don't set records, right? 2% up rally days in the S&P or the NASDAQ because there's this positive gamma kind of blanketing the markets. But in the single stocks, it's the opposite. So at the same time, we were saying, hey, we never get a rally in 2% in the S&P. Well, NASDAQ was NVIDIA and the semis, right? Those names are all going up at a pace that was just unbelievable. Right. And they would almost like never have a less than 2%, rally day. And so, that is the kind of environment that I think we're trickling towards. Like when you look at NVIDIA and things like that, right? You see here Tesla is really quite elevated, but if you look at like NVIDIA skew, they have earnings next week, right? So the vol's a little bit elevated, but you're not getting this ramp, right? That ramp that tells you that that positions are too crowded. So if you look at the semi ETF as another example, this was the most bullish sector of the first half of 2024, and I still think most people would agree that it is the most important sector for the U.S. and global, like the future of civilizations here, right? The semiconductor trade, and there's no bid really, arguably, in these sectors. And so if you kickstart the semi space, which is tied to the most of the market cap, the S&P 500, well, then you suddenly have this room for, I think, a much higher market. And NVIDIA is the trigger point for that, next week on earnings.
Yeah, you're right. It's really interesting what a difference 6 months makes, and who are the winners at the beginning of the year, and then who are the winners now, or those that flagship that was moving the markets isn't as important, not important. It isn't as volatile right now, although I think it is anticipatory with earnings, right? Because Nvidia earnings are just so impactful. I mean, I even before the AI, we're talking 8 years ago, Nvidia was one of those examples I would like to use when we had this impact analysis tool, right? And you could see the impact of stocks 1, 2, 3 days after
Mm.
earnings, right? And it was kind of basic, but it was unique to what we were doing at the time. And Nvidia was a go-to because even back then it was just impactful. Now it's almost like elevated to mythic status.
Yeah. Yeah, and that's true. And it's not up as much as, I mean, you look at Tesla's up 30%, you look like Palantir, right? That stock's up, I think, last time I checked, 30%, could be up 90% from yesterday. I don't know.
Right.
Bitcoin going crazy. In the broader market, S&P Nasdaq's up, 3%. Tesla itself is responsible for about 40 or 50 bips of the S&P rally after the election. So, yes, some of these individual names or the real Trump themes have rallied significantly and are arguably overdone, but the market writ large is not really so overbought, right? And we have this OPEX week that's containing things. We're going to go into NVIDIA earnings next week. Like, yes, the volatility component has been crushed, but if you talk about the rally broadening out a little bit, I don't think we can go, if NVIDIA is bullish and that starts to drag. I mean, the semis are what, 20% of the S&P 500 if you look at Avgo and AMD and some of these other names. And so you certainly start to see the cause or the trigger for another 5% rally, right, in the S&P 500 if that sector can jumpstart. And when you look at this, right, this is only 1 month skew. This is telling me that those options are cheap. And so when you look at Tesla, which is really expensive to try to play upside in, well, if I look at SMH, I go, oh man, that's really pretty reasonable to put some call positions on for the end of the year, or even January, to bet on that rally, right? So it's pockets of the market that are really overbought, certain names, but the other sectors are essentially right now saying, hey, we're not scared of risk. We're going to sell the puts, but they haven't really started to transition to, positioning for that second leg higher. And I would argue when and if they do, then that's going to be a real catalyst for a continued rally into the end of the year.
Brent, one of the questions we had this morning a little bit earlier was, does this market continue its bullish track, or is there going to be a pullback? Do you think there's going to be a little bit of a breather? We might be seeing it now. Today, I was kind of shocked we're not moving on up. Yesterday could have been a pause because of the holiday, full participation today, right? Because banks were closed, but you have a skeleton crew, less participation. But now people are back to work, and we're just not getting that continuation. Do you have any thoughts on that, or what can the market tell us a little bit?
I mean, because it's options expiration week, and I go back to this chart of 6,000, right, and the huge positions there. There's no reason to think that we are just pinning this big level at the moment, right? And not not budging from this, right? Options expiration week. There's call selling and put selling, above and below. That's why that trace map is so blue. So everything about this week is just saying pin this, consolidate, right? But what has been the driver of market volatility this past year? You have to mess with the credit market, which, as far as I know, there's no risk in the credit market. Not only that, the Fed just cut and said we're doing fine, right? Geopolitically, there doesn't seem to be any escalation at the moment. That could always change very quickly. I don't know if Trump is going to change that or not. I think traders are maybe more optimistic now, or people are more optimistic about a quieter geopolitical situation. I really don't know. But those two things are the risks, the risk drivers. And right now, there's no red lights there at all. And so I think a lot of times people are trying to say, hey, like, this is about the fundamentals of market values. And I think it's just about flows, right? And that is what drives markets right now at an increasing, rate. So you see skew, like we were just talking about in Apple, and you see the VIX at 14, and you go, okay, look, like nobody's interested right now in owning puts. You can see that here in the S&P, right? The puts are statistically below where they've been over the last 90 days. The put vol is very low. The call vol is getting bid up. So I think that what leads consolidations in this market is people taking a little bit of their gains. They roll their positions a little bit. They monetize some, and that causes some consolidation, right? That's a whole different trade from betting that the market's going to go down. So I don't see any reason without an obvious trigger, an unknown popping up that causes some consolidation or causes an actual sell-off. I just see just a clear path, right? And I'm not someone that, generally will just sort of say, hey, look, the market's all clear for just continued all-time highs. But the fact is that I just don't see any reason for selling to happen. And people seem to be starting to position for year-end rally. Maybe if NVIDIA earnings are really bad, that would be one thing that could really shake this market up.
Sure.
I don't know when the last time they possibly missed an earnings is. So, let's say that would be one short-term possible catalyst. But if NVIDIA earnings are good, then, I mean, how do you not see this market going, significantly higher?
Santa Claus came early this year, maybe.
Yeah, I mean, it seems to be that way. Look, what is the most speculative asset, I would argue, and maybe Trump has changed this, but it's Bitcoin and crypto, right? And I think if you see crypto going up at the pace it's going up, some of that may be fundamental, but a lot of that is just speculation. And so when you see Dogecoin and all this other stuff going up at 30% a day, right, that's telling you that it is a risk-on sentiment, right? If this was a recessionary environment and people didn't have money and people were worried about the future, like they wouldn't be speculating in some of this stuff that doesn't have a real reason. And like, okay, Bitcoin has a good reason, but like there's these meme coins now that go up, that literally, have no value whatsoever, and they're going up. So that's the speculative fever that we're seeing, right? Tesla going up 30-40% over the last few days is speculative behavior. Coinbase doubling in 5 days, right? That's speculative behavior. And I don't think you just go from speculative behavior risk on to like, oh my gosh, like the world's going to end, right? You got to go through like a cooling of the speculative behavior, people trying to buy that first dip, right? There's a psychological turn that has to make, that has to twist. And if NVIDIA is good, I think it's just going to add fuel to that speculative fire and probably lead to more broadening out of the rally. And people here, again, in the S&P, they're positioned for upside at the moment. You could see that here, right, with the elevated skew. You want to see overbought, look at Tesla. So look at that line, right? It's below the 90-day range just as a barometer, but go look at Tesla and some of the rich stuff, right? This is as rich as call skew will really get, right? The most elevated. This is what a crowded trade looks like, right? So yes, Tesla and Palantir are crowded and overdone, but the broad market is really not yet.
Awesome.
And so that's kind of how I see it at the moment.
Well, Brent, thanks so much. This time goes by way too fast. Where can people find you?
Thanks very much. SpotGamma.com. You can come check us out. We're all doing several OPEX related meeting or webinars as we are doing here. So thank you for the time with that. You can also reach me at SpotGamma on Twitter as well. And I sincerely appreciate the time and the opportunity to speak to your audience.
The following presentation is for educational purposes only. All the symbols, trading ideas, and market commentary are for educational and demonstrational purposes only and are not recommendations or trading advice. Live sample trading occurs in a simulated environment. Past performance may not be indicative of future results. All the information and content presented is provided by NinjaTrader LLC, and the opinions expressed by all third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.